Hello everyone, I am Zura Bapakidze, analyst and representative of company VIPTRADE. The topic of our discussion today will be the technical analysis of some currency pair in the weekly range. Before I start, I would like to inform you that the method of analysis is based on market supply and demand rules and criteria, according to which it's possible to determine the dynamics of possible price movement. I also use a combination 3 timeframes for the analysis, which helps me to determine the global, medium, and small dynamics possible price movement. So let's start. Our first pair is Euro USD, Euro Dollar. On the platform, I have 3 time frames. As I said, that's a daily chart, 4-hour chart, and 1-hour chart. So on the daily chart, we have the pair is in a flat position between the demand 1.1707, 1.1663, and supply 1.1798, 1.18 and 53 between this range, and price from the demand area can develop upward correctional movement to the supply area, this movement. And if the price will break out in any of the areas, up or down, then we will take the motion development in the appropriate direction. The pair trades between the demand and supply areas. So the last on the daily chart we have range between the supply and demand area, but on the 4-hour chart we have so nothing. So we are waiting changing downward tendency to the upward. So on the 1-hour chart also we have nothing before the downward tendency not changing. The next pair we have pound dollar. So the pound dollar, yes. What we have, the pair is also in a flat position between demand 1.3644 and 1.3601 and supply 1.3803, 1.3916 ranges, and from the demand area the price can develop an extending correction movement to the supply area. Extending movement, this movement, which can be caused by the engulfing pattern on the daily chart candlestick pattern. This is the engulfing pattern for buy movement, and if any area breaks, then we will take the motion development in the appropriate direction. The pair trades the above demand and supply, so between supply areas. So it's range on the daily chart, but on the 4-hour chart we see downward movement is changed, and from the demand area we're waiting to upward movement. But from upward movement, when the changing the 1-hour chart, on the 1-hour chart, this correction tendency by the upward movement. So I'm this type, and there, this is Okay, that's all. So the next pair is uh, Kiwi dollar, NZD, USD. So here too, the pair is in a flat position between the demand 0.1724, 0.6981 and supply area 0.1794, 0.7156. And there is potential for price from the demand area to develop a deep upward correction movement. So this correction movement to the supply area, and if this is breaks out in any of the areas up or down, then we will take the motion development in the appropriate direction. So if the price breaks this demand area from the correction movement, we have to take to downward deeper tendency. On the daily chart, we have the range, so we are waiting to break out up or down. On the 4-hour, also we have ranging, so we are waiting buy movement from so when on the 1-hour chart, if the 1-hour chart changing the tendency, downward tendency to buy movement. So we are waiting, changing on the daily 1-hour chart to trading upward correction movement, and then deeper sell movement from supply area on the daily chart. So the next pair is USD CAD, Canada CAD, USD CAD. This is so the pair is trying to break the extended trend line on the daily chart, after which the price movement from the potential supply area 1.2770, 1.2890, 98 will develop a downward trend to the demand area 1.2558, 1.2496. However, it's easily possible for the price to continue moving to the demand area from where it's possible to develop an upward correction movement, and then deeper correction movement to the demand area. The pair trades on between supply and demand areas on the daily chart. So in the middle, so the price is in the middle between supply and demand area, and we are waiting to upward correction movement and then selling from supply area, potential supply areas. On the 4-hour chart, at this time we have nothing because so we are waiting to break this demand area on the 4-hour chart, and from there to dropping to the demand area on the 1-hour chart. So we are waiting changing tendencies for buying and for selling. So at this time we are waiting to move the price to supply area or to the demand area, from where we will take or buy or sell movement. So okay, our next pair is pound CAD. Yes, pound CAD. So what we have, the pair is in the demand area 1.73, 26, 1.72, 73, from where it's possible to develop a small upward correction movement to the supply area 1.74, 62, 1.76, 23, or if we have changed the upward correction tendency, then the price develop a downward movement to the demand area. So from there, this correction movement, and that's to develop a deeper downward trend move. On the daily chart, we have at this moment range from demand to supply area, and then from supply area deeper movement to the demand area 1.7074, 1.7026. On the 4-hour chart, we have nothing because we are waiting to break this area 1.7410 to the upward movement, from where we have to take this buy correction movement to the supply area. On the 1-hour chart, we have nothing because we are waiting to break through this supply area on the 1-hour chart. Okay, our next pair is gold. So as for gold, what we see, it's in the demand area, prices in the demand area 1737, 1681, from where it's possible to develop an extending correction movement according to the lower time frame to the supply area. So to here, from where its supply area, that's 1764, 1760, so I'm sorry, 1765, 1786, from where it's still expected to develop a deeper downward movement of a downward trend in the lower time frame on the 4-hour chart. That's movement. Gold trades between in demand and supply area. So from demand, we can take upward correction movement, and from supply area we can deeper selling on the demand area to the demand area. Sorry. So that was all I wanted to say. Good luck and many profits. Thank you.